Irish consumer confidence has edged up again this month, reaching its highest level in almost a year. But the overall mood remains cautious. While worries about jobs and the wider economy have eased slightly, many households are still feeling the pressure of rising costs, and most expect inflation and house prices to be even higher 5 years from now. To unpack the latest findings from the Irish League of Credit Unions Consumer Sentiment Index, I've been speaking with Louis Fay of St Francis Credit Union in Ennis. Louis, good morning to you.
Good morning, Alan.
The latest Consumer Sentiment Index from the credit union showing confidence edging higher again in February. How significant is this improvement? Is it meaningful or is it just marginal?
I think it's probably a bit marginal, but it is more meaningful as to when the marginal increase is happening. So, February is not noted to be a positive time of the year as a general rule for economics. There's normally some hangover still from the Christmas spend. So it's interesting that the sentiment that this index shows is on the positive side, versus January and December, albeit it has a bit of making up to do to where that sentiment was this time last year.
Yeah, and I wonder if that hangover from the Christmas spend is playing any part in where the index currently stands at 65.2, still well below the long-term average of 85.3. Is that playing a part, or what do you think it tells us about the overall mood of Irish consumers?
Well, I think the news on the most recent news on inflation has been reasonably good. Like it's 0.1 down on on January. But in the overall context, I think that price inflation is still a big issue with consumers. And I also think, albeit that this index does not include the most recent issues around tariffs, but tariffs were still playing, that world, that kind of geopolitical issue around tariffs and wars that are going on. I think really are still impacting on people's sentiment about the future.
It is the fourth consecutive monthly increase. Do you sense that people feel the worst may be over, or are they simply less fearful rather than optimistic, and maybe mindful that tariff talk, we're seeing the latest 10% tariff announced by the US, that kind of thing could rumble on?
Well, I think it's interesting. If you were to take much earlier into 2025, when we were very worried about how the tariffs might impact us, and then the tariffs were implemented, and they didn't terribly impact on employment or on how the Irish economy was progressing. So I think that might be coming through in people's psyche. So it might the impact of those tariffs were not as anticipated, maybe.
While confidence improved slightly, Louis, people felt more negative about their own household finances. Why do you think there's a disconnect there?
Yeah, this is kind of an interesting point that people still have a poor expectation around their finances. I believe that's really that's day-to-day expenditure to me. So it is, right. It's how people are managing their daily, weekly, monthly budgets, and that has got to do for me with price inflation, with especially around rents. There has been reasonably good news around the ECB rates for people with mortgages. So there isn't that pressure coming on the ECB to increase rates, because inflation seems to have been taken under control. But still, I believe that that price inflation is it's a cumulative impact of that inflation over the last 6 or 8 months. It's not just that we're looking at inflation of 2.7%. That 2.7% is year on year. But, you need to look at the cumulative impact of inflation. So you do. So I think that is definitely has impacted people's finances. And it would definitely create a negative mindset about where your finances are.
I do wonder, Louis, if other elements are playing into the level of household anxiety, the likes of Christmas card, credit bills, the recent pension auto-enrolment deductions, rising fuel costs and so on.
Yeah, I think all of those, Alan, they're not things that are if you take the auto enrollment, for example, there was quite a bit of publicity around that, let's say towards the back end of last year, but now that it's here, it's moved on and it's not really spoken about, and if people look on the papers recently, they're seeing the petrol and diesel are going up by 3 cents per litre quite soon. So yeah, that whole, now I'm not quite sure about the credit card bill piece. That's possibly the case. I would hope not, given that the advice is that people should not be using their credit cards for credit because of the high level of interest rates.
I mean, you'd be at the coalface of it in Ennis. What are you seeing at St. Francis? Are members still feeling cash constrained, and is it for many or all of the reasons we have just mentioned?
Yeah, it's an interesting thought. I mean, we are seeing some high level spend on credit cards. That people are using them for day-to-day bits, which is unfortunate, I suppose, in a way. But I think that probably indicates where people's finances are sitting, and that people are feeling that they're constrained and quite a bit of tightness around credit. So they are.
Consumers are still broadly expecting the economy to weaken over the next 12 months. Is that caution justified despite our strong recent GDP figures?
Yeah, I would say, on an overall basis, the consumers expect that the economy will be stronger over the medium and long term. So that position has moved from a year ago we felt the sentiment was that there was kind of 40% of those who were involved in the survey felt that the economy would be stronger in 5 years' time, whereas now that figure has jumped to 47%. So it's interesting. I think given the strength of the government finances, albeit on the back of corporation tax receipts from a small few. But that rhetoric is definitely out there that and to be fair, our GDP is up. They're expecting up around 12% in for this year, which is definitely the highest in the grouping that we would be seeing. So I suppose that it's there's a rationale behind people feeling that our economy is doing very, very well.
Although I do wonder, in particularly recent news, that 46% of take in from corporation tax came from just 3 multinational companies, whether that is really highlighting for people the precariousness of our FDI approach and having so few companies pump so much money into our economy, and is that playing into why more people now believe the economy will be weaker rather than stronger looking ahead 5 years?
Yeah, I would think there's certainly logic in that. I think that fact that came out just quite recently from the ESRI, I think, or one of those bodies, that level of corporation tax take was coming just from three companies is it's startling in a way, so it is, and it just shows you what the risks associated with the economy are, and why that would again, feed into people's thoughts that if one or more of those were decided to pull out or move or were forced to move, then what the impact would be on the economy.
In terms of inflation, 2/3 of consumers expect it to be higher in 5 years' time. Just 1 in 10 expect it to fall. Has inflation changed people's long-term mindset about money? And with just 1 in 10 expecting it to fall, is that a worrying sign that high prices are becoming psychologically normalised?
Yeah, I think that feature didn't surprise me really on this because again I think inflation is again what I was talking about earlier about that cumulative effect of inflation. I think that impact on people's lives is very fresh. So it is, and it's very startling in that it would be a natural. It would be a natural inclination to think that inflation will continue to cause issues, like in terms of people's ability to manage their finances, and we're talking about basic products here, Alan. So we are in terms of everyday stable diet issues. So yeah, I think what has happened in the last 6 or 8 months really is stuck in people's psychic. So it is.
Yeah, we're also seeing 8 times as many consumers expecting house prices to be higher in 5 years' time than lower. If you believe they can even go higher, I suppose that's been the trend for a long time. From a credit union point of view, how are these mixed signals playing out? Are people saving more, borrowing more cautiously, seeking financial advice? And maybe you're seeing increased demand for budgeting supports or small loans to manage cost of living pressures. And if inflation and housing costs remain the big long-term concerns, Louis, what kind of practical steps can households in Clare take now to protect their financial well-being?
Well, I think look as a general rule, what tends to happen when people have poor perceptions as to how the economy might be doing or how their personal finances are doing, they tend to go save more. That's what they tend to do, or as much as they possibly can, to squirrel away. That's a known fact. So it is. So I think in the longer term, we would as a credit union, we would advocate that people would budget, and that people would, as much as practical, attempt to save. To view their utility bills on an ongoing basis, to switch to make savings, and not only to make savings, but then to save those savings. If you get what I'm trying to say, right? So in other words, if you do make savings, then you save that fund. You save those funds for the rainy day.
Look, plenty in the Consumer Sentiment Index, and we appreciate you taking us through and giving us your perspective. Louis Fay from St Francis Credit Union in Ennis. Thanks for joining me on Morning Focus.
Thanks, Alan.